But I mean, if I had been shorting gold all of this time, I probably wouldn't be able to afford the computer that I'm on. So it's a good thing that I didn't bet the house against gold. I think this time I'm gonna go bullish on.
Today we'll be doing 2025 predictions. I'm Paula Rojas and I'm here with my co-host Lucho Sáenz. Hello, Lucho.
Hola, Paola, how are you?
I'm good. Will. So we'll be talking about different commodities. We'll be talking a bit about lithium, a bit about copper, a bit about gold, and everything else in between. So do you wanna get started, Lucho?
Sure. I mean, I've never been big on being bullish on gold, to be honest. I started in the business when gold was below $300. It was between 250 and 270 for the longest time, right? So it was like watching paint dry, and it didn't look like it was going to go up. And everybody talked about the, all of the tons in gold reserves in central banks and how that basically limited the upside on gold. I mean, that's how I got into the business. So, when gold went above $300, people were starting to hedge. When gold got to $500, people were like, "Oh my God, we got to sell, the house." And and here we are at like $2,800, right? I mean, I never thought we could get to these levels, and obviously costs have gone up and everything. But I mean, if I had been shorting gold all of this time, I probably wouldn't be able to afford the computer that I'm on. So it's a good thing that I didn't bet the house against gold. I think this time I'm going to go bullish on gold. I mean, I think gold's going to get to 30, I don't know, $3,500 this year. There's the uncertainty about what's going to happen in the world in general is still out there. And that's been fueling, in my view, the price of gold over the last few years. And I don't think it's going to stop. The demand, at least on the financial side, is still there. There's a lot of money out there, and it's looking for a home, and it looks like gold is going to provide stability. I mean, a few years ago, everyone thought that Bitcoin was going to literally take the shine out of gold. That hasn't happened. I mean, gold went up, and so has Bitcoin. So I don't know. What do you think?
I think this year is kind of set up for another rocky time in uh, the global stage. So that gold thrives in those conditions, rightly so. And I think one thing I think in terms of price, I think I think it's gonna be well above 3,000. I don't know if it's gonna get to four, but I think it's gonna be kind of well sitting in the middle. In terms of kind of trends within the trend, I think one thing that we're going to be seeing is that because of the problems that we've seen in Africa, with Mali and that sort of Congo, it's also undergoing really, really tough, violent situations. I think that's going to kind of push companies that are using or that are operating in or either looking to operate in new places. If you're looking to Africa for new mines and new developments, you're gonna choose places that are safer, right? So, and I think one of the trends is that, so getting out of, obviously, if you're like Barrick, if you have a big mine, you're gonna try to get it back. You're gonna try to resume operations and all of that. But if you're new, you're not gonna look to put your foot in that location. So I think, countries like, it could be Burkina Faso and Ivory Coast or Cote d'Ivoire, like we used to call it when my dad went there. I remember he went when I was a kid. And that's, there's always risk. But I think people are going to start looking to countries like that, which is, where Fortuna mining is operating Senegal as well. So I think that's going to be one trend within the trend. So I think that aspect of it, and obviously you're gonna keep trying to get more exposure in safer countries. Obviously, you're gonna keep doing that. But in terms of the regions, I see that, and I also see more action in the royalty side. So I've been having conversations with people that are looking to either expand their allocation to royalties, streamers and that sort of thing, and then from the sales side, companies are kind of okay. So this is now become a good option to get financing. You have times where, or not that long ago, it would be like kind of unthinkable that someone would invest that much in non-producing companies. But we're seeing that. We're seeing, obviously it's risky and you don't know if they're gonna get to production. But so as an allocator, you're going to have to be very careful where you put your dollars. But I think that's gonna be interesting to see as well for this year. So if we wrap up in terms of gold, my 2 cents would be we're going to be seeing more into safer regions within regions. So from the safer areas to the removing from the riskier ones, and royalties. And from your side, you're thinking price, did you say 3,500?
Yeah. I'm looking at 3,500. There's a couple of things that I wanted to mention from what you said, Paola, that are interesting, right? I mean, you mentioned Barrick, and obviously Barrick's been in the news because of their problems in Mali, right? I mean, but Barrick being one of the majors, there's so much pressure on being a major in gold, right? I mean, because Barrick, I mean, has basically said we only go for tier one assets. Now, the tier one assets are going to be where the tier one assets are. You don't choose the political risk,
Yeah.
right? Um, but when you face something like what they are facing in Mali, I think it's fairly well known that they've had issues in the Dominican Republic, for example, in terms of their growth path there. Replacing one of those assets within your portfolio. I mean, it's like what happened with Cobre Panama when it sort of disappeared from the copper demand and supply balance. I mean, that's tough for someone like Barrick, right? And then you have the next tier company, like you mentioned Fortuna. I mean, there you have a damn good operator, okay? A discoverer and a developer and an operator, right? I mean, Seguela and Ivory Coast, they that was on time and on budget, and that's a cash cow, right? And to a degree, it's below the radar screen because it's not a Barrick. I mean, it's not causing the splash that an investor like Barrick. And that's, I think, where you're going to see some interesting opportunities and interesting plays, right? But if the analysts are looking at the demand and supply of gold, right, and a tier one asset is all of a sudden out of the market, like Barrick's asset in Mali, then it's going to cause an impact because the market's going to be saying it's not only what's it going to take to replace that asset for Barrick, but what's it going to take to replace that asset for the demand and supply curve, right? Now, I haven't looked at the demand and supply, that balance on the gold market in a very, very long time. And maybe it's about maybe I should start considering, I'm predicting a $3,500 price increase. But, I've become used to gold being volatile because of social, political, economic issues as opposed to fundamental issues. But fundamentally, you are seeing large projects being affected by political risk, and that's going to continue. And if you talk about Peru, you've got some significant projects, gold projects in the pipeline that, it's worth looking at the list and seeing which ones, in our view, are going to see the light of day or not. But what you can see in Peru is a whole bunch of artisanal mining increasing, right? Now, these are small small operations, artisanal miners sending to processing plants. So I'm actually involved with a couple of these things right now, and it's a fascinating market, but it's small. Now, small. I mean, because of the grades, and that's the thing. I mean, you're going for grade here, and these are artisanal miners. I mean, you're talking about north of 15 grams per ton, but way north. You're talking 15 to 40 grams per ton. Okay.
Okay.
Now the tonnages are small, but they add up, right? So I mean, you've got these plants, small plants that can produce, I don't know, 30, 40,000 ounces a year for processing this high grade ore, maybe a little more. But get 10 of these, and they're a dime a dozen. Down in Chala Arequipa, they're literally a dime a dozen, right? Get 10 of these, you've got a quarter of a million ounce, 300,000 ounce, 350,000 ounce producer right there. Not consolidated, but it's there. There is gold at these prices. There's more gold ore than ever, but it's just a matter of how you're going to be looking at the market. So different views, a lot more to talk about, and that of course brings opportunities.
So we've given our predictions in terms of gold. If you want to make your prediction, why don't you make it in the comments? Let us know where you see gold going this year. To continue with the next one, which commodity do you want to move to?
I don't know. I mean, among the things that we talked about, I mean, we've talked about copper so many times that maybe we leave that for another time. I mean, we'll see how that market moves along. Lithium's been a bit depressed, and I think you're expecting a rebound by the end of the year. I haven't really looked at that market that carefully lately, other than all of the M&A news. A lot seems to be talked about, on the critical metal side, particularly with Trump wanting to take over Greenland, for example, because of its
So
rare,
let's do that.
rare
Let's
earth.
talk about let's talk about critical minerals in general, and then we mentioned a few, and then we'll talk about the Trump piece, the Trumponomics. There's a new podcast called Trumponomics.
Excellent.
All right. So for lithium, if what I think about lithium, I think, after reading not just, a few articles, but reading about what some analysts are seeing and what some executives are seeing, there was some commentary I think it was last week or the week before, from Pilbara. So CEO Dale Henderson was talking about how they view it as, I think it was October, so the last bottom, as they see it as an inflection point. And I tend to agree, although because these things, there's a delayed effect, right? So you start putting mines in care and maintenance or reducing production, and you start removing capacity of the market, and eventually it's gonna take an impact. And we have a better price now than we did a couple months ago. It's not a lot better, it's an improvement, but I think going to get better as we get to the end of the year. That's where I see it. And I think one important thing that I don't hear a lot of conversation about is, if you look at the closures, we're talking hard rock. We're not talking brine. So the brine producers are fine. It's not like they're, there's a saying, it's kind of ridiculous. There's a saying in Argentina that, like, when your things are very affluent, you're throwing butter to the ceiling. I don't know where it comes from, but it's not like they're doing that. They're not wasting their butter. They're just doing what they need to do and trying to see if they can do DLE and all these other things. But meanwhile, if you have allocation to lithium from brine, in terms of the production figures and then the cost, you're okay. Now, the stocks are not really looking like that. You see the prices and everyone is down. It's like the market is not looking into them in depth through their own economics. It's like, we're treating everyone the same. But I think that may, as investors get more savvy and they understand better what they're investing in, I think we may see a premium um, within the stocks and the companies that have exposure to brine versus hard rock. It's just it's gonna take a little longer. And when this clay, the clay is coming. Thacker Pass is moving along. There's been a lot of movement there, a lot of progress. So yeah, so that's and the if we do a last comment, I think we're gonna still be seeing by the end of the year that kind of chasm between you have a Chinese investor, okay, you're gonna be on this side of the road. You don't, okay, you're on this side, and Trump is gonna make that even more kind of important. So I'm sure he's gonna put a lot more emphasis on that. So we can move into the Trump bit if you want. Do you want to talk about that?
Yeah, I mean, just a quick comment on lithium. I mean, I remember when I got into lithium, when I met you actually, which was
Yeah.
back in 2008, 2009. I mean, there were three players that everyone talked about, right? I mean, SQM, what is today Albemarle, what was Albemarle, and then FMC, right? You know, Albemarle producing in Chile, SQM producing in Chile, and FMC producing in Argentina. That was
Yeah.
it. Orocobre was like the newcomer, right? Um, and then all of a sudden there were like, 25 players in the market. And now everyone's consolidating and you're back to, three big players, right? I mean, that's not an efficient market. The lithium market is still a young market, and therefore it's prone to uh just it's prone to volatility, and it's prone to just a little bit of disarray. And I think what people are losing focus on is that, I mean, I don't think anyone has a doubt about the long-term demand picture on lithium and how strong it is. No matter how you look at it, no matter how bearish you might be about it, it's
Yeah.
still a very strong demand outlook. Okay. And I don't see that many new projects around. I mean, there's tons of new projects around, projects that are actually coming on stream, that are
Oh,
likely to come on stream in the near future. No, and there's tons of brines around. And they're going to have a tough time coming on stream as well because of capex, location,
well,
geography, et cetera, et cetera. So, I mean, I, I think lithium is taking a bad rap. I mean, I think lithium prices are going to bounce back, and because it is a young market, they'll probably when they bounce back, they'll probably bounce back uh, faster and harder than a typical market would, because it's a young market. The whole Trump thing and his focus on critical. I mean, first of all, that's going to add to the volatility on gold. I think Trump is good for gold. You can talk about the economics and inflation, no inflation, blah, etc. I just think the volatility, the uncertainty that Trump creates is good for gold. But if you talk about the critical mineral sector, I mean, if Trump is really that whole make America great again thing, it means that the US needs to be less dependent on anybody. And that's what Biden was trying to do with the IRA, and
right.
trying to promote investment. The thing is that, I mean, Trump and his demeanor mean that he's going to want to get things done today, not tomorrow, today. He's already showing it, imposing tariffs right, left, and center. Has he really thought these through? I don't think so. I don't know. He's got probably a team of hundreds of people around him that have thought these things through. But I think he just listens to a very few, and he picks the things that sound good, and then he just goes for it. Okay.
Mm.
And that's going to have consequences. But one of the consequences is going to be that, you know, those who take the opportunities, they will see that advantage of basically taking that initiative of America comes first, and they will be first movers, and they will take as much as they can. And there's a lot of capital out there, okay,
Oh,
to basically take advantage of moving quickly in those. We're just going to have to see how that plays out. I mean, again, I mentioned earlier, about Trump wanting to take over Mexico and Canada and Greenland,
Yeah.
and saying all kinds of things all over, the Panama Canal. There's a lot of things out there, right? And you can bet that he's going to act on most of them to some degree. Okay. And that's going to cause an effect. And that effect is probably making, China, the Russias of the world, a bit nervous, of course. I think everyone's got to be a little nervous because this guy is not going to stop. Okay. And we've got 5 years, right? Then hopefully he'll slow down a little and he'll start, putting things into perspective, and things that he does move on, he's going to move them in a way that they cause an impact. But I think that all is going to be ultimately good for commodities. And I think it's going to be great for the critical mineral sector. I think it's going to be fantastic because anyone who finds anything with IUM at the end of it is going to be happy. I mean, that dependence that not only the US, but the rest of the world on rare earths, on China, is just not good for the rest of the world, right? And you wrote about it in your blog, and you had that graph. I mean, the critical minerals that the U.S. is dependent on. It's not just the U.S., Paola. I mean, on those, I think it was 10 or 12 top ones that the U.S. depended 100% on someone else, most of them China. I mean, that's the same for the rest of the world. So a little bit of pushback on that is probably good for us.
Yeah. Yeah, no, then you look like we've talked about China. Every time we talk about copper, we talk about China. But China it's really difficult. It's like having a roommate or a flatmate, as they call it here. It's like having a flatmate that you don't really like, but you need their part of the rent. So you're still, you're in uni, you're having the first apartment, and you have a flatmate that you don't like, but you need the rent. So, okay, we'll have to, it's like, yeah, we need China. Like, there's no way to replace it in the short, like in the medium term, maybe long term, maybe, in many years, maybe there's some more balance, but it's so deeply imbalanced that it's really hard. It's really hard to find solutions for this problem, because it's, as you said, it's just that chart that you referred to is and we can put it in the video here, but that was looking at the US. But if you look at the whole world, China does most of the refining for many metals, so that's going to be an issue. And in terms of Trump, one thing that I talked about already, so I'll just say it very briefly, is like he's likely to be very supportive, not because he cares about mining. I got a comment for that, but he doesn't care about mining. He's like, no, I'm not saying that he cares about mining. I'm saying that he's gonna be supportive in terms of helping maybe speed up some processes, getting some approvals moving. I'm not necessarily saying that any of the big projects that have been delayed for decades is gonna, happen. I'm not saying that, because that would be, huge. I don't see any of the, at least not this year. We're talking about this year. So for this year, I don't see something like that, but I do see like clear progress, and maybe more approvals in the smaller deposits that are newer and they're not as politically charged, because this big, Resolution, Pebble Creek, those carry a lot of political and social weight. So reversing anything of that, it's going to take a lot of effort. But if he does something to support it, which I think he will do something, what, we'll have to wait and see. But I think overall it's going to be good for local producers. It's going to be supportive for the local industries that use these local products. So if you have if you make something with local US based minerals, it's going to be also good for you.
No, I'd go one step further than you, Paul. I mean, I think he's going to be very aggressive in terms of the whole permitting issue for anything that is in the U.S. And that's not because he's in favor of mining. That's just because he's pragmatic and he says, well, if we need it, we've got to get it and we've got
Exactly.
to make it as easy as possible. The question is going to be whether he's going, I mean, how quickly he realizes that, you know, a lot of what he's looking for or what America's looking for cannot be found in America, right? And it can be found in Africa, it can be found in Latin America, South
Yeah.
America, and stuff like that. But it cannot be found in the U.S.,
Yeah.
right? And what he's going to do about that,
Yeah.
because I mean, the Chinese with 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 their initiatives over the last I don't know how many years was it in your blog that I read or somewhere else that I read that the Chinese have spent $58 billion in like developing the you know critical alliances in terms of securing uh
No, I haven't written about that.
resources. I mean, it was a ridiculous number. I mean, you know the the U.S. needs to do those kinds of initiatives that are
Yeah.
long-term initiatives. And we'll see how that goes.
Yeah.
But
No,
I
I
but I
think.
think
Oh,
the result is going to be one of American companies being more aggressive domestically and abroad to look for these things that are of you know interest for America and have the financing for it. And I mean that could develop into a whole new market, right? The Canadians made a business out of having approaches for Canadian companies to participate and get financing for them, etc., in terms of developing projects elsewhere in the world. That's the whole reason of being for the export credit agencies, right? To finance companies that will eventually bring raw materials into their financing host countries. So, there's a lot that's going to be happening, and a lot of it is going to be driven by what Trump's policies are going to be over the next couple of years.
yeah. Yeah, and I think the other piece. So we've been kind of running for a number of years now. We've been running chasing the energy transition theme, right? And that there's been some discussion. There's all that's losing steam, but in reality, there's been more cars sold last year. There was about 17 million, so there were more, like 15 or 20% more. I can't remember exactly how much, but it's more. It's another record. And now we're adding on top of that the AI kind of piece that now it's another theme. So this is going to run parallel. It's because they have connections, but they're not, fully depending on each other. Like you're going to have to do a big upgrade in terms of infrastructure and grid, and that carries a lot of copper. We've talked about this in other. We've talked about the grid, but the AI kind of descending on everyone like a I don't know, tsunami of, okay, this is something new that a lot of people 2 years ago or even a year ago wasn't fully counting, and now we have more of that. Just this week we had this big blow up with this DeepSeek app, the Chinese app, that is kind of, okay, so maybe we'll use more energy, less energy, but even if they find a way to make it more efficient, you're still needing a lot on top of an already strained future supply chains. Today we're, okay, so it's kind of balanced, but if you start moving 5 years, 10 years, so the long term, we've talked about this, the long term or the long case remains bullish. I do think we're not going to talk about copper because we've talked too much, but I do want to say that I think the year is gonna be good for copper. It's maybe not going to be, it's not gonna go to 5. Maybe we don't want it ever to go to 5, for the foreseeable future. But I think it's not gonna go too much lower. I don't see it going, in my humble opinion. Obviously, I don't.
I wanted to go to 5. I wanted to go to higher than 5. I'm a director of a copper
But
company,
I
so
would love to, but it's not. I don't think it's gonna happen. I'm not saying what I want to happen. It's what I think is going to happen, which I think is more useful because if we only talk about what we want, well, maybe. Who knows? I wanted to mention uranium because this comes uh it comes as a piece of the Trump bid and the artificial intelligence bid. So uranium has been, improving in sentiment over the last 18 months. There's been new reactors that have been restarted. I mean, all reactors that have been restarted. There's the small modular reactors that are going to be put in operation. I think we see more movement in the uranium price for sure, but we're going to see a bit of news, I think, for that. And by the end of the year, I think it's gonna be more stable, not in terms of the price, but more stable. Like there's going to be more discussion. It's gonna be more accepted generally because of these driving forces that are coming behind. People are still afraid of a lot of things, but I think because of this other a pragmatic view, you said it before, like if Trump is anything, is pragmatic for what he cares about, obviously. And I think that's going to be something that we will see this year.
but they're linked, right? I mean, that's maybe a good segue into what we were going to talk next, right? I mean, copper is, you know, we talk a lot about copper, and we decided consciously that we didn't want to have another episode talking about copper. But you know, we've looked. I mean, in terms of the market, the news over the last couple of weeks has been the potential merger or the merger talks between Rio and Glencore, and I mean that's another big one, of course, that come on the back of big ones that we've seen over the last couple of years, or attempts that we've seen over the last couple of years. And I still think that on the A side, I mean, you've seen some big things on lithium, for example, which are big for that market, but not big in terms of just general numbers. But I think the action on the M&A side is still going to be on copper this year. And these are fundamental players. I mean, this is not the copper market of 10 or 15 years ago, where companies were merging simply to grow, right? To grow portfolio, to grow. There was I mean, now there's a lot more thought going into these, and the Glencore Tech potential merger showed it. I mean, how there was a lot of thought about how this needed to be separated into businesses that made sense, and things split off. It wasn't just let's merge and grow and see where that goes. And I really think that there should be more activity on the M&A sector on the copper side in the mid tier, right? I mean, what's going on with these capstones and Hut Bay and Vale base metals, and why haven't those consolidated, or why haven't some of the big guys said, you know what, we're not really getting anywhere with our big mergers. If we want to grow, let's grow by buying one of these, call them middle tier companies that have a significant production, and they might not be the tier one assets that they want. But with copper where it is now, forget $5 or higher. Where copper where it is now, a lot of these companies are generating significant cash flow and are producing a significant amount of copper units and have a nice growth profile. And you're not seeing a resurgence of or you're not seeing a the juniors becoming mid tiers. You're not seeing that transition. There's not that many of these mid tiers, and these mid tiers, when they're looking at growing, they're looking at buying something bigger or something their own size, and there's not that many projects there. So I do think that that we're going to see something a bit more. I would want to put a wager on who's going to be in that M&A trend this year from the mid tiers. I mentioned a couple of names already. I mean, I think Vale Base Metals is a prime candidate for doing something on the buying or the selling. Merge with someone else or to take someone else. I mean, Capstone's just completed their big project, and they have more projects in the pipeline and stuff like that. But they're not coming. I mean, not Bay. I mean, they're sitting on some nice assets. I mean, what's going to happen there, among others? So I think we're going to see some activity there. I'd like to see some activity there.
I think in my kind of prediction brain, I think we're going to see a big deal, a big transaction this year, at least one. So with one of the, let's say, between the top 10 players or between one of the top 10 and a smaller company, I think we're going to see one big one. And I would put, if I had to bet, I would say it's the bigger player is going to be either BHP or even Anglo or even Glencore. One of the top ones is gonna get into a good one, big one during this year. So one of the diversified, it doesn't, I think it's gonna be driven by copper, but it doesn't mean that it's going to be just because of that. But as long as we see, and I think a clue on who that target could be is going to be the continued or the divestment of things that are trickier or things that no one wants to buy today, which is, the typical coal and kind of the less sexy commodities. And yeah, I think that would be, if for my view in terms of deals, I think that's what I would say. It could happen in the smaller mid tier as well, but I think we're gonna see a big deal this year.
We'll see.
Yeah, and I think in terms of, I think we're also going to see, going back to deals, I think we're going to see a lot of failed ones. We're going to see more attempts that are not gonna fly for various reasons. So it's going to be interesting to watch, I think.
So it's going to be a good year for the bankers.
Yes, a lot of fees. Well,
because successful or failed, the bankers always win.
Yeah. Well, we'll be doing more of those too, in our scale. They're smaller, exactly, but still interesting. All right, I think we're good. Do you have anything else that you wanted to cover?
No. It's good to be back. We want to get back the swing of things this year and be regulars with our audience. So we'll look forward to comments, and if you want us to talk about something, just let us know.
Yes. So very, very good to be back, and always good to see you, Lucho, and we'll be back.
Exactly. Always a pleasure to see you, Paola. Thanks so much.